All right. Well, happy Monday, everybody, and welcome back to our talk show. I'm your co-host, Stephen Norris with Keller Williams Realty, and as always, is my co-host, Michael Dodd, Megastar Financial.
Hey, Stephen, how are you today?
I'm doing real good, and obviously, with next weekend being Father's Day, we have some pretty fun plans. Just probably a barbecue or two. What do you like? What plans do you probably have for next Father's Day?
You know what? I'm just going to listen to what my wife and kids have and definitely try to get together with my father. So it's his birthday, it's his 80th, and he's got kind of that double whammy with the 80th as well as Father's Day. So we'll definitely try to figure out what to do during all this COVID stuff, right?
Yeah. Oh, I love that. That's awesome. I hope you guys have a fantastic time. Well, guys, with that being said, for today's topic, we are starting our new series, and it's going to be all about student loans and what is the situation when it comes to those right now. If you have your student loans right now, whether you are or not graduated from school right now, how do your loans affect you when it comes to wanting to buy your first piece of real estate? So that's what our topic is going to be about today. So with that being said, Michael, take us through some of the characteristics of what forbearance means specifically for students who are currently graduated and have been paying on their loans.
Well, the good thing with that is right now we know that they are not making payments, right, and it's not affecting their credit. However, if you're looking to buy a home, we still need to take that debt into consideration. So when we're looking at that student loan debt, we're going off as a loan officer. We're either going off what's represented on your credit report. So there's your liability, your debt, as well as your payment. So if you have a payment on there, we can go ahead and use that payment. Or we're using 1% of that payment if there's no payment, because maybe currently you're in school and maybe those payments are deferred. And if they are, we still need to take those into consideration. So we can look at 1% of that. Or if you have some kind of student loan statement, Stephen, we'll go ahead and look at that statement. If there's a payment on there and it's not listed, we can give that to our credit reporting agencies that the lenders use. Each one has their own specific one that's assigned with their company or not. And we can go ahead and do a credit supplement and use what's on that payment, what's on that statement for that payment. So we really need to take those into consideration. But most of the time, we are really using 1% of that.
Gotcha. And so, Michael, you mentioned something very, very important there, and you mentioned the term debt to income ratio. So, for all of the younger folks on there who don't really know what that means, give us a quick definition of what your debt to income ratio is and how you calculate that.
Okay, well, your debt to income ratios, we're looking at basically all your debt, liabilities, and school loans, installment loans, if you have a car loan. And then we're taking that and we're looking at what your monthly income is, and we're dividing that, right? We're dividing it into that, and that'll tell us what your percentage of debt to income that you have. And in the lending world, all depending on how much you're putting down and what program you're in, it really could have a significant impact on what you can buy, right? So we want to look at things that are basically 49% and below. A lot of times, that will depend on what you're putting down. And if you're only putting down 3 or 3.5%, like on FHA loan, we see that we can push the debt to income ratio close to 50 on FHA, but conventional loan, if you're doing 3%, we're seeing more and more right now in this environment that anything over 45% debt to income ratio, I'm not really getting a DU approval on that. So, however, if you're putting 5% down, I'm seeing things go all the way up to 48 and 49% on your debt to income ratio. So, but I mean, the school loan is something that we definitely have to take into consideration, even though that you're not paying anything currently. We're still going to have to count that debt against you because we know eventually that'll come back.
Gotcha. And so, Michael, you mentioned two pieces in there actually. Not four, two pieces in there when it comes to your debt to income ratio as a student, whether you are or are not in school. And so, for a quick calculation, guys, let's say the example is that monthly you make $1,000, and monthly your current debts all bundled up together equal $500. That means that your debt to income ratio is at 50%. That being said, if you are a student, you have graduated, your monthly payments that you put are what's going to be tacked into that debt to income ratio, all right? So that is a very simple calculation to meet. On the flip end, if you are currently still in school and maybe you are looking to buy your first piece of real estate for a number of reasons. Number one, contact us that we can kind of go through what that actually means for you specifically. But at the same time, how does that apply for your debt to income ratio? Is this it's the 1%. So if you have a total of $50,000 as a junior in college, that means that 1% of that is going to be tacked onto the total amount of your debt to income ratio. All right. Now, if that makes sense, great. We are going to keep, rolling through this. And if it does not, then please drop a comment below and or just personally message us, and our contact information is on there as well, and we'll be more than happy to explain that further. Okay.
Right. I mean, that's a $500 payment, Stephen, right? That's an additional $500 a month. Stephen, let me ask you this. What are you seeing with your student debt right now?
Well, as you guys all know, you can probably guess, I went to Colorado State University behind me right there. Loved it. And so what I actually did with my student loans right now, I'm still paying them off. Absolutely. And after I graduated, the company that actually bought out my student loans was my Great Lakes, which personally, I have nothing bad to say about them. I think they're really easy to work with. And so what I actually did with them is that I just called them up and I just talked to them and said, hey, what kind of options do you have for me right now to not essentially get rid of my student loans for a couple of months, but just put them on pause? That's the best way I can tell you guys what it equivalates to. Is just we put them on pause for about 3 to 4 months. And with that being said, though, you are not going to continue to earn interest on your loans. That's very, very important to understand, all right? Because for some loans out there, if you put them on pause, it's still accruing that interest, which obviously is bad. It's very, very bad, right? But if you're a student,
more expensive.
Exactly. It just adds and adds and adds. But that being said, specifically for student loans, when you put them on deference or forbearance, then it just pauses the payments and you still accrue no interest on there, all right? So that's very important. You still pay off the entire balance, but you're not accruing any additional money onto your loan during that pause period. So that's very important, all right?
That's really good information. Hey, I've got one more question for you on that then. I mean, we know if you're putting your home in forbearance and not make any mortgage payments for 90 days, do you have to make that full 90-day payment like on a house, like what we're doing on the mortgages, come that 90-day period or that 4-month period that you were talking about? Or does your loan start from there, start new again after that little pause that you said that you take?
From what I'm seeing for right now, they're not going to say, hey guys, if your payments were 200, $300 a month and you pause it for 4 months, you owe us $800 right now. I'm not seeing that. And obviously, every single creditor is going to be different with their rules and regulations. And so I would definitely look at the fine print of whomever you are using for your creditor, which again, if you guys are a little bit confused about how those all work, give us a call because we do this every single day. We read those fine prints. We love it. We take a little bit of joy in doing that kind of stuff. So do that with us. But with that being said, though, it's an evolving world that we're in right now. But currently, no, I am not seeing that you're having to do a lump sum payback immediately when your pause hits resume.
Well, good. Good. I mean, that's a true pause then, and get your chance to get your feet underneath you during these trying times that we're all going through.
Absolutely. And that's the biggest thing to take into consideration as well, guys, because through everything right now, I mean, as I mentioned, everything evolves as new information becomes apparent to us. And with the situation that we're in right now, we really don't know what the future is going to hold at the moment for us. And that's why you guys are watching this channel right now and watching our, every single Monday, or as we're watching our videos, because we keep you up to date with the latest information that as we become a parent, we share with you because we want you guys to be as informed as us all the time. Right, Michael?
That's right. I mean, that's our job, is to keep you informed so you can make better decisions.
Mm-hmm. Yeah, guys. So, with that being said, we're about to wrap up our episode here. But, Michael, what would be your final comments to any of the folks out there right now who still have their student loans out there?
Well, you know what? If you have student loan and you're trying to get in the housing market, the biggest thing is talk to your local lender. Feel free to contact myself or even you, and we'd be happy to help them. But I would contact your local lender and see what you do qualify for. The biggest thing is sometimes we just don't know what we can do. There's some special loans out there for students and other people. So it's really about running those numbers and seeing where you're at. and then trying to put a game plan and in front of you, so maybe we can get you to be a homeowner in the near future.
I love it. All right, guys. Well, that being said, drop some comments in below if you guys want to see some more topics being talked about, because, remember, all the videos that we're doing for you guys and you gals out there are things you told us you want to learn more about. So please, 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 contact us, email, text, phone call, smoke signals if you want, about topics you want to learn personally more about. And this is your first time watching our channel, then, please like it and share with whomever you feel that this information would help out as well. But,
Yeah.
with that being said, Michael, what are your closing remarks?
Yeah, just please like, comment, and share. We look forward to hearing some more questions and talking about some more topics with you guys. So have a great week, and don't forget about your fathers this week.
Absolutely. All right, Michael. Well, I'll see you next week. All right.
Hey, have a great week. I'll talk to you soon, Stephen. Goodbye, everyone.
All right. Bye.